Yeah, good morning, everyone. US market continued to decline, and now it is at somewhere near October level, and even uh, futures of the US market are also down. That is mainly because of Netflix announced the result after market over there, and they had their results were below expectation, and Netflix is down in aftermarket by around 20%. So that is further putting the pressure on the indices. Taking clue from the US market, even Asian markets are also down across the board. But commodities are not showing similar trend. Commodities are, though the oil is down by around $2.5 from yesterday's level of around 89 to now 86.6. That is mainly because the US said that they may be releasing extra oil from the reserve. And apart from that, the aluminum is down by around 0.5%, copper is up by around 0.4, iron ore is up by around 1.6%, and steel is up by around 0.5%. So negativeness is there in the market, and which may get reflected into even Indian market as well. I'll ask technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Looking towards the Asian markets, I believe our Nifty is likely to open with a gap down near at currently Nifty may open at 17,670 or 17,640 levels on the downside. So it will be a gap down opening, and we might see some range bound trading session after that. Technically, now 17,640 will act as a crucial support level because the support is provided by its 100 days moving average. If today Nifty manages to respect that support level, then only we can witness some amount of a pullback rally on a intraday or in the coming trading sessions. But if it's not and maintain a closing below that, it is 17,640 levels, then the selling pressure is likely to be continued towards 17,600 and 17,540 levels on the downside. The overall view will remain a cautious on the Nifty as long as it sustains below the 17,800, 17,800 levels that will act as a crucial resistance levels on the Nifty. If it manages to give the breakout of 17,800, then only we can witness some pullback rally on the Nifty front. Till the time, the view will remain cautious and the selling pressure is likely to be continued in the coming trading sessions. Coming towards the Bank Nifty, yesterday we have seen that the Bank Nifty has touched its 100-day moving average, and we have seen some sort of a pullback rally on the intraday basis and managed to maintain the closing above that level, which gives us some sort of a relief sign. But looking towards the today's market and today's momentum, I believe that this support, that is 37,650, will like to break, and if it's break on the closing basis, then we can witness a more selling pressure, or the selling pressure is likely to be intensified, which might take a Bank Nifty towards 37,400 to 37,200 levels. So for a intraday purpose, just keep a eye on 37,600 level, that will act as a crucial support level for the Bank Nifty. Whereas on higher side, 38,400 will be the first resistance level. Above that only we can expect some pullback rally, which might take a Bank Nifty towards 38,600 to 38,700 levels on the higher side. Coming towards the Nifty Finance, for today intraday purpose, the first support is placed at 17,850. Below that level, 17,730 levels can be seen. Whereas on higher side, 18,100 and 18,200 levels can be seen on the higher side. So the overall view on the market will remain cautious as long as indices are trades below the mentioned resistance levels. So just trade with on the cautious note. Don't build up the major long positions, as we are continuously emphasizing from last 3 to 4 trading sessions. Uh, just be a light on the long positions, but trade each and every transaction with the strict stop losses. Today we are not initiating a major calls before the market. Let's the market sustains or just sustain near the support levels and give the clear indication of the trend during the market hours. Only then we will initiate a buy or the sell call. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you very much, Swati. See, on the derivative front, from the last few days, in fact, when everyone was very positive, looking at the data, I had clearly mentioned that there is going to be profit booking, or one should be doing profit booking around the 18,300 odd levels, and we are already down 600 odd points or 500 odd points from the top. And very likely, we are likely to go down further. At that point of time, 17,500 strike had witnessed some considerable amount of open interest built up as well. So that was also a major consideration for the same. So that continues to be a strong level on the downside. And if this 17,500 level is breached, very likely, we might erase all the rally that we have seen in the last 15-20 days from 17,000 levels. So this is one of the major support areas for Nifty. Also, I think the 200-day moving average is placed around the same. So, the 50-day moving average also placed around the same levels. So, if 17,500 is breached, expect further selling. Um, the VIX continues to remain at elevated levels, and it is likely to go further up to the 2025 odd levels because of the budget and the UP elections. The one good thing for the markets is the PCR. The PCR has come down sharply from 1.3 odd to about 0.75. It is in the oversold zone. And just like yesterday, in the last half an hour, we saw a 100-point rally in Nifty. That is how, probably such rallies will keep coming now again. So that will be the silver lining. But again, just like Swati said, when you're trading, that trading should be near term or probably intraday, and keep stop losses, because these rallies will fizzle out, and you will see further selling coming in. Now, looking at the scripts, banking sector was good yesterday. Now, banking sector as a whole did perform well, but with everything falling, you don't expect the banks to continue to hold as well. So we might expect some amount of selling coming in into the banking sector. So stocks which are actually in the weak zone in the banking sector, like IndusInd Bank, these banks might witness some amount of selling pressure. I don't think frontline stocks will witness much selling at this point of time, but definitely the B group counters can witness some selling. Metals were strong yesterday, and the open interest for metals continues to suggest that probably they are the only sector which will witness some amount of bounce going forward. So, look out for the same. IT sector is likely to continue to remain weak going forward. So there can be some further selling coming in into stocks like TCS, Infosys, Tech Mahindra, and at the time of rollovers also we had said the IT will remain weak. So that is the view that we continue to hold. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. PNB Housing Finance result has declined. Loan book continues to decline as the company is running off its developer book, and accordingly, the operating profit declined 30% year on year. Wholesale loans are still 12% of total AUM. So even in next few quarters, we expect that the decline in growth will continue. GNPA increased from 6% in September to 7.6% in December quarter, as company adopted new RBI rules for NPA recognition, which requires daily tagging instead of month-end tagging. Excluding this, NPAs would have been flattish. So our view is avoid on PNB Housing Finance. Results for South Indian Bank as well as Bank of Maharashtra were both lukewarm, Asset quality remained elevated with an increase in restructured loans to around the 5% mark, which seems to be very high compared to other banks. So one should avoid both these banks. Bajaj Finserv result improved. We already discussed the results of Bajaj Finance, which was good and witnessed sharp improvement in asset quality. Apart from that, the life insurance segment is doing well, where they are gaining huge market share. APE grew by 65%, which is almost 2x of industry growth of 30%. However, on general insurance side, growth is slightly lagging the industry growth. If we exclude the lumpy segments of crop and government health, then the company's premiums grew by 6% against industry growth of 10%. The slow growth in auto sector is impacting the whole general insurance industry. Although combined ratio for Bajaj General Insurance remains at one of the highest in the industry at 99%. We remain positive on Bajaj Finserv. Lastly, Bajaj Auto result had already been discussed yesterday, but just a quick snapshot of the con call which happened yesterday. They said that two-wheeler industry retail sales declined by 11% in Q3 and will continue to decline in Q4 as well because of the third wave of COVID and also chip shortage. Exports demand scenario is better, where company is able to take a 5% price hike in one shot, and company increased its global market share and continues to enter newer countries. Currently, there is just one product on the EV side, Chetak, which sells in 8 cities. So now company will expand it to more number of cities, almost to another 12 cities in India. Also, company setting up a capacity in Pune to produce 5 lakh EV vehicles per year. They had made this announcement few days back, which we had discussed also. EV rollout will begin in June 2022. However, in terms of aggression, they were a bit milder. They said that company will focus more on properly developing products before introducing them in a hurried manner, as they don't want to introduce half-baked products which will then have problems, like we are seeing some bit of it in Ola, where some scooters are having problems and bookings are getting cancelled. On three-wheeler EV side, they will be launching that in June quarter next year as well. So, however, overall, in the near term, we are neutral on Bajaj Auto. Thank you.
Good morning, everyone. Yesterday, Hindustan Unilever announced their results. Results were, though marginally above expectations, because the margins have come at 25.4% versus expectation of 24.8%. However, during the commentary, the management sounded cautious about the demand outlook, because it is moderating because of the high commodity inflation, which is likely to keep the margins under pressure going forward. So for today, we expect the stock to be muted or under pressure. Asian Paints came out with the results, and though optically the results were below expectation, because the margins were down at 18% versus expectation of 19.8. However, the commentary was quite good, and the outlook given by the company is good, and they have said that the Q4 is expected to be better than Q3 because the demand outlook looks very strong for them. Demand volume growth for this quarter was also 18% versus expectation of 16.7. Though the stock is still trading expensive at 72 times FY23, we expect some positive movement for stock in today's trade. Shoppers Stop came out with the results, and as the trend we are seeing that the company continued to report improved set of results, and this quarter also the margins have improved quite a bit at 19% versus YOY 13%. So we are positive on this and expect the stock to react positively also. Havells India announced their results, and results were below expectations. The revenue though grew by 15% YOY. It was and above the market expectation. However, the margins came disappointing at 12% versus expectation of 14%. The stock is also expensive, trading at 55 times FY23. Biocon results optically look below expectations. However, the EBITDA included one-time MTM loss of around 77 crores. If we adjust for that, actually the result is quite okay and actually little marginal better than the expectation. So the con call is scheduled now at 9 o'clock. So we expect the stock to remain positive in today's trade. Dodla Dairy, that's the newly listed dairy company, announced the results, and results were declining. Margins were quite disappointing at 8% versus last year for 13.8%. That's all from me. Thank you.
Exactly. Good morning, everyone. Uh, Emphasis has posted above expectation numbers for the quarter with TCV coming in at 335 million. This takes FY year to date TCV at 1081 million. Dollar revenue came at $414 million versus expectation of 406 million. Stock is trading at PE of 32.8 times FY23 EPS. Persistent has posted in line with expectation set of numbers both on the revenue and the margin front. Cient has posted inline set of numbers both on the revenue and the margin front. Guidance, the company has guided for double-digit growth in FY22 in services, and DLM growth will be impacted due to supply side challenges. Full year margin guidance has been improved to 350 bips versus last quarter guidance of 300 bips. Share stock is trading at 18.2 times FY23 EPS. Sasken has posted decline set of numbers both on the revenue and the margin front. Thank you.
Yeah, apart from this, yesterday Century Textile reported numbers. Apparently looks declining as paper has shown declining EBIT margin, and also uh, textile has not shown any improvement. But the real estate, which doesn't get reflected much into the financials, had shown higher booking in this quarter as compared to last quarter. It has booked somewhere around 300 crore plus booking, whereas last quarter the booking was of around 200 crores. But on the other hand side, the rental income has declined from 32 crores to around 29 crores. That was mainly because one of their client, which is on the rental, has vacated one floor of their area. So that's why the rental income declined. But apart from that, overall, if we see the demand outlook for the residential sectors is quite positive for real estate sector. No doubt, in all, if we see the results were more of a neutral type of outlook for them. Then C8 came up with numbers and day before yesterday, day before yesterday, and yesterday in con call, management has indicated that the outlook for the near term continue to remain challenging. Last quarter, in third quarter, the cost increase was at around 4%, and the price increase which they had taken was around 2%. And there is a further price increase of around further raw material cost increase of around 1 to 2%. And to come back to their normal margins, they still need to take around 5 to 6% price increase, which we feel is challenging in the near term, considering the demand environment. So company had taken some price increase in two-wheeler tire recently, but across the board price increase, they are targeting around 1 to 2% more in coming period. So still the performance will continue to remain subdued in the coming quarter. So outlook near term remain subdued, though the valuations has come down substantially from the high. Apart from that, CCL product also had yesterday con call and given positive outlook, and they maintained their growth guidance of over 15% in volume terms in FY22. And they are coming up with large capacity in Vietnam in the FY23. They are doubling the capacity from 13,500 to 27,000 in Vietnam, which is highly profitable as compared to India market. And that will start in somewhere second half of FY23. So that will have a bigger trigger for the company going forward. Even the domestic business where they are developing a brand in the name of Continent Coffee is growing steadily at over 40%. Current year also the growth is over 40%, and they are expanding their distribution network now from in the other market than South also, which is the company is gradually building this brand and is likely to benefit over a period of time on that account. So we continue to remain positive on CCL product. Then result for 27th. AIA Engineering is likely to report numbers, and numbers are more of like a okay set of numbers. Revenue is likely to grow by around 16% year on year, but decline quarter on quarter. Margins are likely to improve quarter on quarter. Then Birlasoft is again likely to report more of a okay set of number. Revenue is likely to grow by around 5.3% quarter on quarter. But that is the baseline for all the company where revenue growth is coming at around 5% quarter on quarter, and the similar growth is expected from them also. Margins are likely to remain stable. Then Colgate Palmolive is likely to report numbers. The numbers are not numbers are likely to be subdued. The quarter on quarter revenue will decline by around 5%, though year on year it will be up by around 5%. So, and margins are likely to remain stable. So not seeing any great growth, considering the revenue growth of 5%, seems like volume may be declining. Dalmia Bharat again likely to report more of a inline, more of a stable numbers. Quarter on quarter, we know that the margins are declining. EBITDA per ton is likely to decline by around 200 rupees, which is what the trend is in the cement sector. And volume is likely to increase by around 15% quarter on quarter. So that is quite considering that it is comparatively positive. But margins are likely to remain under pressure. Then GMTC is likely to report number. We are seeing that the coal prices continue to remain high, imported coal price, and GMTC mainly is into lignite coal, and which is substitute to the imported coal. So they are getting some higher realizations for their product and are having higher demand for their product. So result seems to be positive for GMTC. Then Indian Metal and Ferroalloy is likely to report number. Here we expect that company to report more of a flattish type of number quarter on quarter, mainly on account of increasing coal, which is likely to have some impact on the margins, though the realization can still be comparatively higher than the last quarter. But post that, the realizations will come off as the prices of the ferrochrome, which were running at over around 1,25,000, are now at around 96,000. So going forward in fourth quarter, we may see profitability declining. Indus Tower again is likely to report flattish number, revenue growth of around 1% quarter on quarter, and margins are likely to remain stable. AI industry is expected to report good numbers. Revenue is likely to grow by around 22% year on year and 5% quarter on quarter, and margin is likely to remain stable. Nippon Life is likely to report good numbers. Revenue is likely to increase by around 40% year on year and 15% quarter on quarter. And margin is also likely to improve from 59% to 62%, and last year 55%. So results are likely to be good. Route Mobile again is likely to show improved set of number. Revenue is likely to grow by around 32% year on year, and quarter on quarter of around 17%. The margins are likely to remain stable. Then Transport Corporation of India is likely to report okay set of numbers. Canara Bank is likely to report numbers, and numbers are likely to be more of flattish. Q1Q revenue, Q1Q net interest income is likely to grow by around 3%. Because of the lower provisioning, PAT is likely to grow by around 8% quarter on quarter. Provisions are likely to come off from around 3,300 to around 3,000 levels in this quarter. Share is trading at around 1 time price to book. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.